Assalamualaikum and good morning. Today we are from Group 12 for ATW 153 Financial Accounting. Today will present about firm performance analysis. Our group member is SHAZWANNI binti ROSMI, NURSYAHIRA binti RANI, MOHAMAD Darwish bin ABDULLAH, WAHIDAH binti MOHAMAD YUSOFF, MOHAMAD IFAL SYAUQI bin ZULKURNAIN, and the last ALIAH ZULAIKA binti ZAINAL SHAZLAN.
Acid test ratio. Acid test ratio can also be known as liquid ratio or quick ratio is a measure of a company's immediate short-term liquidity. Liquid assets can be termed as those assets which can almost immediately be converted to cash or an equivalent. Formula for acid test ratio is current assets minus inventory divided by current liabilities. Based on the graph, even though acid test ratio for Borneo Cooperation Berhad is higher than Padini Holding Berhad for 3 years, average acid test ratio for Padini Holding Berhad is higher than Borneo Cooperation Berhad from 2015 to 2019. This makes Padini Holding Berhad has better acid test ratio than Borneo Cooperation Berhad.
Inventory turnover. Inventory turnover is a ratio that measures the number of times inventory is sold or consumed in a given time period. An inventory turnover formula can be used to measure the overall efficiency of a business. In general, higher inventory turnover indicate better performance and lower turnover efficiency. Higher turns show that not overspending. Lower inventory turnover rate may be caused by overstock. From the table, we can say that Borneo record better performance in 2019, which is 2.08. Padini record better performance in 2018, which is 4.40. From the graph, the overall we can say that Padini Holding Berhad is better than Borneo Corporation Berhad because high turns show that this company not overspending.
Assalamualaikum. My name is SHAZWANNI binti ROSMI and my part is account receivable turnover. Based on the graph, Padini is higher than Borneo, which is in 2019, Padini recorded the higher number at 1.142, while Borneo recorded the higher total of 1.003 in 2015. In 2020, Padini recorded the lowest amount of 0.863, while Borneo recorded the total of 0.855 due to pandemic COVID-19. Next, asset turnover ratio. Based on the graph, Padini also recorded the highest number than Borneo, which is in 2019, Padini recorded the highest number at 1.897, while Borneo recorded the highest number at 1.003 in 2015. In 2015, Borneo recorded the lowest amount of 1.029, while Borneo recorded the lowest amount of 0.628 in 2020.
Assalamualaikum and hi. My name is IFAL ZULKURNAIN. I want to present about debt ratio. What is debt ratio? Debt ratio is defined as the ratio of total debt to total asset, expressed as a decimal or percentage. It can be interpreted as the proportion of the company assets that are financed by debt. How to know about debt ratio for each company? We can use the debt ratio formula. Total liabilities divide total assets. We take a look for the debt ratio for Padini and Bonia companies. We can see that Padini got 32.71%, while Bonia got 39.19% in 2015. Meanwhile, in 2016, Padini got the highest rate, which is 41.37%, compared to Bonia, they only got 35.05%. The debt ratio for each company, as we can see, is fluctuated. This is because we can see in 2017, both of the company got 37.35% for Padini and 35.97% for Bonia. In 2018, both of the company show reduction, which is 29.22% for Padini and 51.35% for Bonia. And 2019 also showing the reduction for the both company rate. However, the rate of debt ratio for Bonia is higher than Padini, which is 25.65% compared to 22.52%. Okay, we move to the next presenter. Thank you.
Net profit margin. Net profit margin is a financial ratio used to calculate the percentage of profit a company produces from its total revenue. It measures the amount of net profit a company obtains per dollar of revenue gain. The net profit margin is a ratio formula that compares a business profit to its total expenses. The higher the net profit margin, the more money a company keeps, but the lower the net profit margin, the less money a company keeps. From the table, we can see that Bonia recorded higher net profit margin in 2017, which is 7.60%, and Padini recorded higher net profit margin in 2018, which is 10.61%. From the graph, the overall net profit margin shows that Padini Holding Berhad is better than Bonia Corporation Berhad because the company record higher net profit margin. It means Padini has more money that company keeps.
Return on assets or ROA is a measure of how effectively a company uses its assets. Higher is this figure, better is the utilization of the company's assets. Based on the table above, we can make a conclusion that on 2015, Bonia has 7.64% of return on asset, which is the highest than all the 5 years from 2015 until 2019. On 2018, Padini has 19.28% of return on asset, which is the highest than all the 5 years from 2015 until 2019. Based on the illustration above, we can make a conclusion that Padini Holdings Berhad has a better return on asset for almost every year than Bonia Corporation Berhad. This is because Padini Holdings Berhad has more asset efficiency than Bonia Corporation Berhad. Return on equity or ROE is a profitability ratio specially meant for the equity shareholders. Return on equity is not only an indication of how well a company uses shareholders' funds, but it is also an overall sign of profitability. Based on the table above, we can make a conclusion that on 2015, Bonia has 13.11% of return on equity, which is the highest than all the 5 years from 2015 until 2019. On 2016, Padini has 29.3% of return on equity, which is the highest than all the 5 years from 2015 until 2019. Based on the illustration above, we can have a conclusion that Padini Holding Berhad has a better return on equity for every year than Bonia Corporation Berhad. This is because Padini Holding Berhad is better at generating returns on the investment it received from its shareholders than Bonia Corporation Berhad.
For earnings per share is a company net income, also known as earnings, divided by weighted average number of common share it has outstanding. EPS indicate how much money a company make for each share of its stock and is widely used metric for estimate corporate value. A higher EPS indicate greater value because investor will pay more for a company share if they think the company has higher profit relative to the share price. EPS is one of the common indicator we could use to pick a stock. Based on the average EPS year by year, Padini with 21.68 cent is far better choice than Bonia with only 4.16 cent. Padini has a significant uptrend in EPS by year compared to Bonia with the downtrend movement. It's fully show that EPS theoretical value per share of Padini is worth to investor as relative to market is willing to pay for each dollar of earning. For price to earning ratio, the PE ratio measures the price paid for a share relative to the annual profit of the company. PE ratio expressed as the number of times of profit attributed to equity holder that the company is valued based on its market capitalism. A higher PE indicate a positive future performance and investor has higher expectation for future earning growth and willing to pay more for them. In contrast, lower PE means they are undervalued because their stock price trade lower relative to its fundamental. We can compute PE ratio using formula market price of share divided by earning per share. Based on the average PE ratio, Padini has 14.78 times, which higher compared to Bonia, which only 13.6 times. In general, a higher PE suggests that investors are expecting higher earning growth in the future compared to the companies with lower PE. Next, in determining which company appear to be stronger candidate financially, we agree that Padini Holding Berhad is stronger candidate financially. From the overall ratio analysis, Padini Holding Berhad performance is better compared to Bonia Corporation Berhad, and it increased year by year as we can see as shown in the ratio analysis. This show that Padini Holding Berhad have effectively and efficiently using its fixed income to generate revenues and able to optimize the profit. Plus, they have sufficient short-term asset to cover its short-term liability. In conclusion, Padini Holding Berhad is best performance stock and will give a higher return. For Padini future outlook, Padini Holding Berhad expect the economic outlook for the rest of 2020 and 2021 to be tough, owing the uncertainties wrought by COVID-19 and countermeasures to curb the pandemic. In that sense, Padini optimistic to be consistent execution on strategies to manage the top and bottom line, as well as opportunities to look at the greener pasture. Padini continue to implement measures to control costs, optimizing working capital, preserve cash and streamline its operation to cushion the impact of COVID-19. Padini also adapting to the new normal post-pandemic change in consumer behavior, including in-store shopping and digital retailing. The fashion retailer is also focusing more on developing its digital retailing further to extend their purchasing channel for the convenience of customer and future growth. Moving forward, Padini will continue to monitor the overseas market for opportunities to increase their market presence in Asia, especially ASEAN country. However, the outlook is unpredictable as the full impact of COVID-19 pandemic cannot be ascertained until the health crisis is full brought under control.
Future outlook for Bonia. Bonia Corporation Berhad's earnings over the next few years are expected to double, indicating a very optimistic future ahead. This should lead to stronger cash flows, feeding into a higher share value. Bonia expects to face further challenges as the global economy remains highly uncertain, while the domestic economy will take time to recover from the effects of the COVID-19 and overall subdued consumer sentiment. The group remains prudent in resource management and continues its effort on brand building to improve brand image and recognition in order to ensure long-term and sustainable business performance. New initiatives to be adopted include investments in the digital environment, enhanced presence in social media and digital advertising. Moving forward, Bonnier expect the top line to remain under pressure as the sales momentum is likely to be subdued in times of weaker consumer sentiment, exacerbated by the proliferation of online e-commerce portals. Bonnier Corporation, in its future prospect, reported that the outbreak of novel coronavirus COVID-19 is expected to severely impact the already soft retail market and further weaken and subdue market sentiments as well as consumer spending. Since the outbreak of COVID-19, the group has taken swift actions and measures to reorganize and mobilize its resources, including rescheduling its productions, purchases and expenditures, as well as manpower planning its workforce.